Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host, Joel L. Connon, along with Brianna Valesky, and we have Kendrick Wakeman on the line. He's the CEO of FinMason. Good morning, Kendrick.
Good morning.
Thanks for joining us today. Could you just give us a little bit of your education and your background in the markets?
Sure. Basically, I've been an institutional investor for about over 25 years now, and I started by learning to program a computer in the 80s, in the early 80s, and then started investing as a student at college at Dartmouth, and kind of got interested in that bug and started building option models because that was a good intersection between programming and investing. And actually got into this AT&T investment challenge, which was kind of a paper trading thing they had way back when, and ended up winning that, or not winning it, but being in the top 2% of options traders 3 out of 5 times as a college student. So needless to say, I was pretty much hooked at an early age. I went on to get my CFA. I worked at several institutional investment boutiques. Ran a research department at what at the time was the largest equity-linked securities research boutique in the world. Ran a department at a large bank. Went on to help run a hedge fund at Lazard Asset Management, and I guess various other things as well.
Tell us about when you were at Lazard. A very big group there. You started building your own skills with computer models and learning the options. What did you learn at your time at Lazard that's kind of shaped your investment strategies?
Wow, quite a bit. So my first boss took me aside and told me, Kendrick, investing is easy. All you need to know is why everybody is wrong and when they are going to realize it. So obviously that's pretty difficult to do, but that simple statement did shape my investment philosophies going forward. So in a couple of important ways. One is that I realized the importance of catalysts. Knowing when people are going to realize when they're wrong is a big part of the investment thesis as far as I'm concerned. Now, I think catalysts are important for several reasons, and I'm usually talking about fundamental catalysts when I talk about catalysts. One, I've got to tell you quite frankly, I'm a fairly impatient person, so waiting around for many years for an investment is just not kind of on my plate. But also, if I'm going to do a lot of work on a situation, I want a fairly rapid payoff so that I can free up my time and also free up, importantly, my capital for the next situation. I'll also say that there's some other benefits, like, for example, it removes the temptation to trade on valuation alone, particularly on the short side. As you know, valuation shorts are very dangerous bets. So having a clear catalyst has saved me probably on more than one occasion. And also importantly, it allows me to use some time-sensitive instruments, such as options, which give me a lot more flexibility in structuring trades.
All right. Leading into that, what goes into building and running an institutional level risk management program? You mentioned use of options. I'm not sure if you use any futures or not, but talk about what goes into that.
Well, an institutional level risk management program actually kind of means different things to different people. So risk management for example, for a swing trader has a lot to do with a discipline around avoiding debilitating losses and being very disciplined about the way you trade things. But risk management for me is something different. As I say, I like to play catalysts, and risk management for me is actually an integral part of the investment program. So to me, what I like is a system that can help me identify all the possible risks with a trade so that I can kind of select the ones that I think I have an edge at, or the ones that I want to take on, and then hedge away all the risks that I don't have an edge on or I don't want to take on. So that sort of a system needs to be actually fairly robust. I need to be able to analyze my trade under various different scenarios. I need to be able to look at the correlation between various investment vehicles, between investment vehicles and macroeconomic factors. And also, depending on the sort of trade we're looking at, I also need to know how the various macroeconomic factors work with each other. So basically, that all comes down to being able to do a lot of scenario testing on my trade to see where the exposure lies. And if there's an exposure I don't like or that I don't think I've got an edge on, then try to figure out a way to hedge that away. And that's when I use a lot of options typically, or futures, depending on what the risk is that I'm looking at.
Okay, aside from the institutional end, you do some things on the retail end with your site, FinMason. Tell us about it. How did you come up with the idea and the name?
Well, the idea stemmed from one of the frustrations that I'm sure many of your listeners have at cocktail parties, which is, when I was introduced as a hedge fund manager, I knew that there was probably a 1 in 5 chance that I would kind of get sunk into a 30-minute conversation about what that person should be investing in. And a lot of the times, they're asking about what they should be doing with their 401k. And we used to have this great pension system in this country, and that's kind of gone by the wayside now. And what's taken over is the 401k, where people are basically forced to make their own investment decisions. Now, that's not a big problem for your listeners, but if you think about the average person out there, there's a lot of anxiety, fear, doubt, and distrust when it comes to trying to make investment selections. So that's when we get into these conversations with people who they basically want to know what they want to do. You give them advice if you want, but at the end of the day, they have a lot of advice coming at them. What they really need is a way to determine which advice is right for them and which advice is not. And I can't really do that. So during these conversations where I would actually got to a point where I'd try and avoid the conversations by telling people I was a farmer, or I think at one point I even said I was a lyricist for a hip hop band, with, just to kind of move the conversation to some other topic. But I thought, wouldn't it be great if there was a site, a website that we could direct these people to, and they could kind of get the answers to their own questions, and then I could go back to introducing myself as the hedge fund manager, and the conversation would just move on. So that's when we thought of the notion of FinMason.com, or a place where people can go, and we could apply some of these sophisticated risk management techniques, slim them down for a retail population, and then have people kind of go on and for their own selves take a look at their portfolios, understand how their portfolios behave under different scenarios, which, by the way, is really the right way to explain investing in portfolios to people who don't have any financial training. And then they can take a look at any advice that they may be getting and see how that changes how their portfolios behave under various scenarios. And so far, it's been pretty successful at explaining portfolios to people who don't really have a lot of financial training, and therefore, hopefully, alleviates a lot of agita around cocktail parties for myself and your listeners, perhaps.
Okay, so tell us about when you go to your site and the FinScore. Tell us about that.
Well, the FinScore is something we came up with because investing, when you're talking about 401k investing, this is not talking about trading, but in 401k investing, the most important thing you need to get right at the beginning is what is your risk tolerance, or what is your capacity for investment risk. Modern portfolios are built around risk, not return. That return was the way we built portfolios back in the 80s. Right now, we build them around risk. You figure out how much risk you should have in your retirement portfolio, and then build the best possible investment mix around that without violating that investment risk tolerance. And FinScore is kind of a consumer-friendly way to describe how much risk you should have in your portfolio.
And who can make best use to your site? I mean, someone's starting out, doesn't have a lot of money, someone's been in the markets for a while. Who makes best use of your site?
Well, we thought at first that it would be largely millennials visiting our site because they are early technology adopters. But when you look at the people who use our site, it actually runs the gamut. And we have everybody from people who are already retired to people who are literally just got out of college, last summer, and they are in their job for the first time and have the 401k pile slammed on their desk, and now they want to try and figure out what to do. It helps that our site is completely free and accessible. So basically, we draw from a very broad population.
Okay. All right. Moving on here. Can you make up your own portfolio and examine the risk in the portfolio on your site?
Yeah, you can. We don't actually have a lot of people who do. Usually, what people do is they will go on the site and take a look. First of all, they do the risk tolerance test. We show them the sort of risk and return profile that they like the best. Then they compare their current portfolio to that risk and return profile to see if there are any fixing that needs to be done. And then they can actually go and look at a lot of different professionally managed portfolios and see how that compares to their portfolio to see if there are any that they like better. And that tends to be what most people do. Keep in mind that most of our users are not very sophisticated when it comes to investing. We do have a bunch of power users or sophisticated users who go in and can perform what-if scenarios and adjust their own portfolio, adding any fund, any investment. We analyze 6 million assets daily globally. So if you want to put in, some obscure municipal bond, we've got that. If you want to use options, we've got that too. But that tends to be a fairly small part of our user base. Most of the people are kind of run-of-the-mill people who are very anxious about investing and just want to get a better handle on what to do with their IRA.
And so it's something, or their portfolio. So it's something that you wouldn't necessarily go to every day. You would go there, get your evaluation, and then, make adjustments as necessary.
That's correct. I mean, we have kind of all the elements for a really good trading system, but that just hasn't been the market that we're addressing right out of the gate. The 401k market, of course, is just a much larger opportunity for us than the active trader market.
Oh, for sure. All right. So, boiling down everything here, can you just give us, your short-term and your long-term outlook for the markets? Been in a trading range really since the flash crash. Kind of come back up to the top of that trading range here. Give us your outlook for the markets.
Well, I see you saved the easy questions for last. I should say that I'm a quantitative and fundamental analyst, and I am a lousy market technician. I learned this very early in my career. I will say that I've seen a lot of markets, obviously, over the last 25 plus years, and this one looks somewhat familiar to me. It seems that we've had a good run in the economy, but valuations have caught up. So there's not a huge argument to be made around any valuation gains or huge valuation gains. On the flip side, the economy seems to be hanging in there. So to fundamentally say the market's going to go down is a difficult call. And the big problem, I think, is that we've got several catalysts, all of which have been partially priced in and partially not. So my guess is going to continue with the trading range. I'm kind of hoping we continue with the trading range because, quite frankly, in my view, if this market resolves in the very short term, it's going to resolve to the downside, not the upside. So hopefully we continue in a trading range until we can get some of the anxiety around negative catalysts behind us or resolved in some way, and we can then kind of look back towards the economy to march us back up.
And we have a thing called earnings season approaching. I believe it kicks off today with Alcoa, so that's always interested. Always get some good movement during earnings season, so we'll keep an eye on that. Kendrick Wakeman, CEO of FinMason, coming on the show today, explaining his site, his investment style, and outlook on the markets. Kendrick, thanks for coming on. We'll speak to you again soon.
Thank you. My pleasure.